Welcome to the Scaleup Valley podcast, where we bring the best of the best to help you scale your business from 1 million to 1 trillion. Today's guest is Mel Shakir, the managing director at Dreamit Ventures. Mel, welcome to the show.
Well, thank you for having me, Mike.
It's really a pleasure, and it's good to know that we are in touch with common friends, namely a previous guest on the show, William Kilmer from C5 Capital. But for the ones who don't know, didn't have the pleasure yet to know you before, so let us know a little bit more about your journey. So, who is Mel?
Okay. I'm a cybersecurity guy. That's what the neighborhood guys know me as. I've been in the cybersecurity space for almost 20 plus years of the 30 years that I've been in IT industry. So I've seen it all in the cyberspace. I've been with RSA, McAfee, Nitro Security, and most recently I was head of product at Securetech. That kind of sums up my resume. All the details are, of course, on LinkedIn.
Sounds amazing. And let us know a little bit more about Dreamit. So what is the model? What is the thesis, etc. A little bit what Dreamit is about.
Yeah. So, at Dreamit, we are a venture fund. And, our business is to deploy capital. We've been doing that over a decade. We are at fund number 3, and we are raising right now for fund 4. At Dreamit, we focus primarily on 2 verticals, which is in our DNA. So one is digital health. We've been doing that for a long time. And the newer vertical is Securetech. And the Securetech entails cybersecurity, risk and compliance, anti-fraud, physical security. And that's kind of the area that I drive, given my background.
Got it.
We usually write check sizes of, we used to write check sizes of $500,000. These days we write large checks of $750, and going forward we'll be writing $1 million checks. That's the initial check, and then we'll invest in follow-on rounds as well. We don't lead the rounds, but we focus on building a strong syndicate of partners. If I may continue, one more thing that I'd like to add
absolutely
is how we differentiate ourselves. Right, there are 1,000 VCs out there. So
good question. I think the audience would appreciate.
So our key differentiation and why startups like to come to us is because we have a very strong platform that we have developed for startups. Most of us at Dreamit, we were founders ourselves, so we understand what the needs are at the early stages, because that's the time we focus on pre-seed, seed stage companies. So our platform comprises of over 1,000 plus institutional partners, investors, and it works really well with them because we are a sourcing partner. And you mentioned C5 Capital, for example, right? That they're an example of a sourcing partner who are looking to write bigger checks. We don't look to lead the rounds, but also on the early customer traction side of things, our platform is invaluable for our startups. We maintain very strong network with over 75 plus CISOs, CIOs, CSO partners across industry verticals. Even on the healthcare side, we work with almost every major healthcare institution that you can think of. So that gives our startups a really good opportunity to scale up fast. We compress that time frame for them.
Got it. So, and your model has evolved, right? Because in the beginning you were much more you have kind of an acceleration program, but now you are much more pre-seed investor, right?
That's correct. Yeah, very early in its Dreamit in its early days was an accelerator. We are no longer an accelerator, but we have retained a little bits and pieces for our startups. So we still have a very methodical process. In terms of how we're going to accelerate our startups, right? It's not open to everybody. It's just open to the 8 or 10 companies that we need to deploy capital. It's only for our companies. And we have a process called investor sprints, where it's a 2-week time frame in which you get them 20, 30 curated meetings. We'll do the same, with customer traction, which are customer sprints. And again, our goal is to get them 20, 30, highly curated meetings with top level executives. So we maintain, that part from the lessons learned early days as an accelerator.
Got it. So in summary, it's kind of a pre-seed fund, not leading the round, and typically the first check is from $500,000 to $1 million, right?
Correct. Yeah.
So that's kind of the thesis. And geographically, you are also based in Philadelphia, US, investing all across the US and also Europe and any other geos, or?
So we are focused in North America right now, and North America is actually the United States. It doesn't even include Canada right now.
Because you had some companies in Europe in the past, right, or not?
So we invest in Israel right now and US, because again, Israel is a big hub for security. So we can pass on that. Also, the taxation structure is similar to the US. But our fund focuses right now on the US. And in the future, we're looking to potentially expand into some other regions. But today, it's just US.
Got it.
And we are based out of Philadelphia. Yes, we have offices in New York as well.
Got it. And in terms of what is the best way for founders who are raising a pre-seed or a seed round in the digital health or Securetech space, what is the best way to reach out to you?
Yeah, we're pretty friendly. They can reach out to us on LinkedIn, any forum. They can reach out. We are very responsive, but they can reach out, through soft intros if they see somebody in common in our LinkedIn contacts. I've been in the industry for such a long time that almost anybody in security is definitely connected to me, at least in the second degree. So
it's good to know. Perfect. And it's great that you have been an entrepreneur almost all your career, and now you are much more an investor. But of course, you also support your portfolio with your operator skills. But so what has been the transition in terms of mindset shift? So what has been your lessons learned moving from an entrepreneurial mindset into an investor mindset, or combining both today?
Yeah. So I started off as an engineer, and that was my background. I'm an electrical engineer by training. And then when I got into software development, of course, I got into, I was a programmer. Very early days. And then I transitioned more into a product development role. And now I'm an investor. So, the critical thinking that engineering brings to the table, that's very useful. But being an investor, you have to look at it more from the terms of, everything potentially that can go wrong. And I still get accused of the fact that I think everything is positive, and I don't think enough on the negative side. And that's one of the things that I'm learning and transitioning into as an investor, right? Because now we have deploying capital, and there's a lot of risk, right? Especially with early stage companies. But it came mostly naturally to me. For one, because it is still in an area that I know well, security. That's something I've done over a long time. But the big difference is that you have to start becoming more of a generalist across so many subcategories in security, because security is vast. And over the 20 years, I've been focused on developing products mostly for the security operations center. So if it was NDR products, network detection response products, mostly SIM products, I led 4 companies on the SIM side of SIM development. But now we have to know about every subcategory, because we are investing over a wide range, right? So that's the fun part. Actually, I really liked,
always learning.
The continuous learning part of it is fun, I think. And so that's one thing I like. And then the energy that, with the startups, right? Working closely with the startups, that energy, I love that part. I always work with startups, so I continue to work with startups. I just don't have to take the day-to-day headaches of delivering product and meeting with angry customers anymore. But I think the transition overall has been pretty straightforward for me and easy.
Yeah. And also great to know, to be updated about the last the innovation that is coming out into the market and the new ideas, new technologies. I think that it's also a fun part instead of being just in one company, right? It's nice to see a portfolio of companies and also the ones that you don't invest in, also be in touch with what is going on in the market.
Yeah, no, I mean, knowing exactly what's going on in the market and knowing where the trends are, what the future looks like, I think that is really exciting. So yeah, and then I get to work with a lot of companies. We have 30 security companies in our portfolio right now, and across so many different subcategories. So it's fun working closely with them, helping them in their journey. And these are all, I believe, most of them are transformational in the security startups. So it's exciting to work with them.
I was just checking on your LinkedIn, one of the recent posts that you did, kind of a company on your portfolio that combines both of your verticals, right? It's in the health tech space and also in the Securetech space. I think it was kind of 2 weeks ago. I don't remember the name, but maybe you remember. So I found it interesting that it was a company that is really connecting both areas. It is Scaleup, right? That's the way we pronounce it.
Yeah. No, Scaleup is an exciting company, and that's a great example where security is important in every vertical, and for Scaleup, of course, the focus has been healthcare.
Exactly, sounds great. And of course, starting up and scaling up are different stages of growth. So what has been some of your tips? And let's start with the earlier stages on how to build products, how to start with MVP. So how can we quickly validate if we are solving the right problem and that we are addressing the right ICP and that we are really going step by step from the pre-seed stage into the seed and A stages?
Yeah. So I think the most important thing in any product is making sure that you're involving customers or prospective customers from day zero, right? So whether it's the ideation phase, whether it's a design phase, or whether it's a development phase, you're always working with customers. And the one big red flag, when startups come to us and they've developed a great product because they have great experience in a specific industry, but they have no customers yet. Or they don't have design partners. That's the worst part. They not work with them. That's a huge red flag for us. So, everything starts with understanding your customer segment. And whether you're solving a big pain point for that specific customer segment, because everything else, like the go-to-market strategy and the scaling of the company, it all kind of depends on that very foundation that you're building. And it takes alignment from the enterprise to come together and agree that this is the customer segment that we're going to service. Because what happens in the early days is the sales team, they're incented by quotas, and they will keep bringing opportunities to you which may not perfectly align with your customer segment, and it'll keep pulling you in different directions.
Right.
And you have to be able to say no. But at the same time, you also have to help them understand, what are the uniqueness, differentiation of this product, and what is that sales playbook, that they should be executing with laser focus on, right? Because the goal is to kind of win that one customer segment and then expand from there. Maybe there are two customer segments, but you have to be laser focused. So all the engineering left aside, I think the thing that precedes it is really the customer segmentation, and even all the scaling that comes after that, all the feature development, that you're going to prioritize. It all depends on the customer, understanding the customer segmentation.
Right, and it's really important that stage that product, the revenue seeds work together. I mean, product, sales, CS, and marketing all are in touch with the customer and are really working all together in order to start building that revenue machine. But that initial stage is still really the product and making the first user or the first customers love the product, or the way the product helps them to solve their pain and be successful with the product.
Yeah, no, absolutely. Like I said, and if you're not very careful in the early days, you'll get pulled in every direction because you'll be lured by that sale. Then you'll be developing, a little bit of features for one customer, another customer which looks a little different, and you become a jack of all and master of none, and you don't want that, right? At least in the initial phases, you want to be able to be laser focused on a specific customer segment.
Right. Any tips on how to identify the customer segment? Of course, it will depend a lot from company to company, but any general tips on trying to understand? I was thinking, for instance, giving you an example about autoimmune conditions. There are a lot of health tech companies now in the space in terms of chronic management disease, and a best practice that we see is they always pick one condition first, and the process of understanding what is the condition that might be the most interesting to start with. We might need to go into the market to validate what is the condition that is more promising. Of course, there is an example that we can apply into Securetech as well. But how to do that process of understanding what is the ICP that we should start with?
Yeah, great question. And it is a little bit of learning at any given stage. And I'll give you a great example of a company that's just went through that process and successfully has landed on the right customer segment. So there's a company called Havoc Shield, and it focused on SMB customers. They develop a great technology and platform to help deploy a security program, right, at SMBs. Now, when they initially came to us, our initial goal was that we're going to help them find some customers who have that pain point. And of course, it has to be regulated industries, right? So the healthcare, financials, they were servicing those companies. And certainly that was one way to do that. But then we realized, or rather, we wanted to think, how do we scale this, right? It is, you're still selling to SMBs. It's not a big enterprise sale. The customer acquisition cost is significant. And one way to kind of reduce that is to go to some channel partners and start leveraging the channel. But what will that channel look like? So initially, I thought was, all right, let's go to MSP market. But the MSP market, of course, we understand that it can be quite fragmented and quite different. They have their own sets, right? There's some MSPs that focus to small, medium, large, but they may be vertical specific. They may have certain skills like NDR or ADR, but not others. So we tried a number of things, and then we realized that that insurance industry, right, the SMBs, first when they were being pushed by the larger companies who were asking them to kind of show them evidence that they have a security program in place, they were first going to the cyber insurers to get insurance. Right? That was done step one. So it became the cyber insurers actually became the focal point where the leads were coming in, and the cyber insurers have a problem at hand because they couldn't just write cyber insurance to these companies. They themselves needed to understand whether they are doing the right things and whether they can underwrite those policies, because the loss ratios have been very high on cyber insurance. But that helped us understand that to reach the SMB market was going to be a strategy, not just through MSPs, but for the time being, it's going to be through cyber insurers. That's a great example, right? So it took a little bit of time and effort, but you finally end up in the right spot, right? You have to spend the time and effort to do that.
This is a curious point, because I think that these kind of skills are critical also when scaling up. So when you are really going from one segment to another, you go back into the startup mode because you still need to validate if the customer segment is the right one to add, right? That's why even the show being a lot about scaling up companies, I always like to come back into the starting up, because I think that when we are scaling up, we also need the starting up skills in order to launch new products, new segments, and the process is the same. And I think that sometimes we have a hard time transitioning from a startup mindset into a scaling up mindset, where we need to double down on what is working, but we also need to plant the seeds for the future. And planting the seeds for the future is a startup mindset. So we need to combine both mindsets, and usually this is not easy for startup and scale up executives and founders.
Yeah. I'll give you a great example, right? So, for example, if you're going to use a channel, and the channel, let's say, is managed security providers, multi-tenancy, centralized billing, many of those features will be important, which may not be important for if you're going directly to the enterprise, right? And if that is going to, you may have to put foundational engineering, stuff right from the beginning, right? So you'll have to think about it, even if you don't build the entire feature, but at least the foundational features you'll have to, you'll have to start thinking about that early on.
Before going a little bit deeper into your passion and your specialty on Securetech, just a little bit of some thoughts on what needs to be proven in order to raise a successful pre-seed round and seed round. I know it really depends from company to company. There is not a concrete playbook, but typically, in general, in your experience with Dreamit, what typically milestones the founders need to achieve in order to be in a good position to raise the pre-seed and the seed round?
Okay. At the very high level, of course, it's, we look at team, tech, TAM, and timing, right? So the 4 T's are easy to remember, but in the tech part, right, the key is differentiation. And what we are looking for is that what is unique, what is defendable, right? That is hard, that you're putting a lot of effort in, and not something that's easy for somebody else to build up. And the one thing that we don't like as investors is a Me Too company. And what I say Me Too is essentially that you're yet another risk and compliance company or a malware engine company. But if you don't show us the right kind of differentiation, it becomes very difficult to differentiate yourself in a very competitive field, right? So, when we invest, that is the main thing we look for. Of course, we are investing in technology, and there has to be sufficient technology differentiation. And then they have to be able to sell us on the market opportunity. In a lot of cases, we do understand that, but sometimes, the playbooks are not proven out, right? Mm-hmm. So if they're a little bit further along in terms of, they have at least a few customers and they're referenceable, that becomes easier. If they're pre-revenue or stage, right. At that point, we have to rely a lot more on the team and what they're capable of, and especially if they've proven themselves before. That, of course, builds up a lot of confidence.
And also pre-product, is it possible with a pre-seed round? So having a strong team, strong understanding of the timing, the market opportunity, the TAM, as you said, and the differentiation, but yet not any single line of code made or an MVP.
So we have not invested in companies that have not had any single line of code, just a PowerPoint slide. Yes, the angels will do that. For us, that would be a little too early. But we have invested in companies that were pre-MVP, right? But they came to us with just a fantastic vision, and we really believed that they could execute on that vision, given their background. It was a high bar that they had to cross, but we would invest in early stage companies who are pre-MVP.
Right. And this transition now from pre-seed into seed, of course, there is still a validation of all these factors, but what needs to be proven a little bit more in detail in order to raise the seed round?
Going from pre-seed to seed, of course, you have to start, there's a product and you have a few customers, and those are referenceable customers, because there's no way for VCs like us to be able to validate whether the technology works other than the references that they know. Right. So it's all about customers, right? And how much is that customer focusing? They're starting to make serious inroads with customers.
So it's really product managers, product metrics, engagements of the customers with the product, and of course the the feedback and also the NPS, and if possible, if the retention of the customer, if there is upsells and the customer wanting to consume more of the product, let's say, right?
Definitely. In the pre-seed, I mean, even to the seed stage, at least things are moving so fast in security that they will be at Series A with less than 10 customers potentially. So,
exactly. So we never know now. That's why.
Yeah. So things move really quickly from pre-seed seed to the Series A. You barely need to be at $1 million revenue, and the companies are raising Series A. It didn't happen like this, 5-7 years ago. You need to have some serious revenue. But in the seed stage these days, we'll find that companies have less than 10 customers. Sometimes 5 customers, right? So when you only have 5, we want to make sure that every one of them is really happy and you're doing exactly the right thing. And we have to be convinced that you have started to develop that playbook, right? You're addressing that customer segment. You're really focusing on that pain point, and you're having a meaningful impact.
So kind of in the summary, you already have an MVP that is a little bit more sophisticated than an MVP. The first customers, the customers are happy with that. And we can see the vision, we keep seeing the TAM, and we keep seeing what is the narrative. And I think that the narrative is also really important. If the founding team is able to articulate what is the big vision and how to come from the future into the present and to crack niche after niche, right, in the direction of that vision.
Absolutely, yeah. But even in some cases, they may not have customers, but the prospects are still lined up. Right, they're waiting for some features, but they've done a POC. They like the product. They're still referenceable. So all those data points are important.
Exactly. So they're showing a little bit more of traction, even if there is no revenue. But again, mitigating the risk or proving that this is a real market opportunity, not only in theory but also in practice. Right. Okay. So let's jump into more the Securetech vertical that you lead at Dreamit. So what are the trends, the areas of potential growth in the future, or the areas that you are more enthusiastic about?
Yeah, it's pretty exciting actually. In the last 5-7 years, we've seen a lot more innovation than I've seen in the decade before that. Being even in the security industry, I always complained that we were mostly reactive, and the necessity was the mother of all invention. If there was a problem, we would go try to fix it. But now, there are a lot of foundational technologies that are available to develop highly scalable and transformational products, and that's really exciting. So things are starting to change in security, and one of the big drivers, of course, has been the digital transformation that's happening, right? Which even got accelerated further by COVID. That is driving a lot of innovation. Access solutions, for example, VPN going away, and people accessing their enterprise through edge solutions that are delivered over the public cloud and through content delivery networks. On the authentication side, passwordless future is more or less here. There is so much IoT. There's so many IoT devices. So at home, at work, and security around that is important, etc. But just to move to the cloud, there's so many new technologies that had to be developed, right? For one, security in the cloud, right? And how's that going to happen? So we talk about cloud security posture management, cloud workload management, for example. But one exciting area driven by cloud, for example, is networking and security being delivered as a service through the cloud. And Gartner calls this as a SASE acronym, Secure Access Service Edge. And what that essentially means is network as a service and security as a service is coming together and being delivered as SaaS services. This is really transformational, in my opinion, because in our days, we delivered appliances in-house for the data centers. And appliances for everything, for network monitoring, for endpoint monitoring. Think of it, there was just the whole stacks of appliances. Right. And you need so many different teams to deliver security. You needed the network team to kind of give you VPN access. Then you needed identity team, to grant you right access into the applications. And then you need a security team to monitor that you're doing the right things. Imagine if all of these were delivered as microservices on the edge in the cloud. There's nothing to deploy. So it can be transformational. The technology is transformational, but even the cost, right? It can be 10x, 20x better than what it was. This is just an example, right? But there are, in almost any category that you think of, whether it's network security, endpoint security, application security, even services, XDR services, for example, there is something trending and something innovative going on in each of those areas.
I will not ask you what are your favorite companies on your portfolio because it's not fair. But what has been some of your recent investments and some trends that you see that those companies and problems that those companies are trying to solve? Maybe that's a better question.
And a great question. So one of the companies is in the SASE space, for example. And right now they're focusing on identity threat detection and response. We clearly saw that with the Okta breach, that when we were talking about XDR, we were still talking about NDR and EDR mostly, or rather it was SIM plus EDR and then we added NDR. But what about ITDR? Sorry, identity threat detection response. Well, that needs to be part of the equation as well. So that's an exciting area. But even some of the verticals which have an urgent need, for example, critical infrastructure, right? We need our critical infrastructure systems to be secure. Our local water treatment facility needs to be secure. And do they really have the resources to do that? No, right? Because they're not their local water treatment facility. They don't have dedicated security people. How are you going to secure these environments? We have another exciting company who's doing something in that area. Layer 2 encryption. And layer 2 encryption, so encryption is interesting, but layer 2 encryption is even more interesting for us because to deploy layer 2 encryption means you can cloak the network without actually changing IP addresses of the devices. Because the latter, changing those reconfiguration would be almost impossible because you cannot have downtime in these critical infrastructure systems. Right. So how do you do that, without any downtime or very extreme little downtime? Right. During the maintenance time, you're able to sneak in your security solution, and you've got a security deployed. And wouldn't that be fantastic? You gave an example of a healthcare company earlier, so these are definitely some of the areas that are very exciting for us. But cloud security is another area, and even though, many of the public cloud vendors like Amazon and Google and Microsoft, they've been investing heavily in foundational technologies, and even in companies, each of them has like 30, 40 investments in cybersecurity startups.
Incredible.
Still, there's a lot of scope of a lot of innovative stuff in security because many of the CISOs that I know, right, they're getting a lot of signals back in terms of what could go wrong, but it's the classic problem of too many inputs, and they're not able to prioritize on what to act on. So again, that would be an area. Cloud security is still a very exciting area for us.
Got it. And maybe this is a good point. So one of the main decision makers of the Securetech startups would be the CISO, or in some cases I would say also the CIO, right? So what are some of your tips? And of course, you have shared with me, and it is also on your website for the ones who want to learn more. The Dreamit doses, right? Also on YouTube, there is a lot of them over there. But what are some of your tips on how to understand CISOs and how to be effective selling into a CISO? Like I said, we have a pretty strong network of CISO partners, and I'm always chatting with them to stay current on what their needs are, their perspective, right? Now, of course, they're all in different stages of maturity. Their programs are in different stages of maturity, and their needs might be a little bit different. So some may be looking for more foundational technology, some are looking for more
next gen kind of products. So it varies. So one has to understand what the need of the CISO is and whether you can fulfill that need. And the need is going to vary, right? Now, of course, there are certain things like COVID hits and all the CISOs have a very specific need. Work at home. People are working from home and you need to secure those environments. So there might be some trends that might be driving all CISOs in the direction, but in general, you can assume that the security programs are going to be at different stages of maturity and they will have different needs. So for one, you have to have a product that fulfills a need for the CISO. Nobody's going to write you a check if it doesn't actually address a need that they have. And usually the CISOs, I know that they'll be focused on 2-3 things are really critical on their mind. And you can't have a conversation if you're not addressing those 2-3 things, right? So it could be identity and access management. It could be passwordless. It could be cloud security because that's where their company and their business is moving. So you have to know who you're talking to and whether there's a need. And then you have to be able to demonstrate a solid ROI because this is a conversation that the CISOs need to have internally, right? And there are many ways to go about it. So whether it's through automation, whether it's through quickly being able to reduce the remediation time or being able to help them understand, what is the risk and the liability, which is going to translate into dollars, right? It has to finally come back to some way of dollars because they need to go back in the budget and kind of explain that. So demonstrate a solid ROI. That conversation has to be had. And you have to be able to align with their bigger roadmap and vision. Because sometimes they may not, if they don't have an urgent need right now, you can still align with some of the strategic priorities on the roadmap. So, you should be able to ask those questions to them and say, yes, where are you going? What is important for your enterprise going forward? And certainly you might find, alignment with the roadmap.
The power of asking good questions and understanding the mindset of the decision maker and having this customer success mentality that we were talking before about the product, right? So it's not about us, it's about the person it is in front of us, and we are there to help that person to be successful. If that person is part of the customer segment, if not, we should also have the courage to say, not at this time. This is not the right customer segment to serve at this time.
One of the things that we do at Dreamit, and we have a lot of success. So I mentioned the customer sprints. Yeah. And our customer sprints are usually a 15-minute call with the CISO, right? Wow. And this is also after I already have an understanding of the problem statement. So it is a curated meeting to us in a sense, right?
That's great.
And the CISO has seen a description. But our companies in that 15 minutes, they present for 7 minutes, 5-7 minutes. That's it. Mm-hmm. And problem, solution, how it works, and what is the current traction, and perhaps an ask. Right? Very short conversation. And if it is meaningful, if it addresses a need, you're going to get a deep dive session with them or with their team. Right? And that is our goal. Right? Prospecting quickly, rather than taking too much time off for the CISO. The CISOs love that format because they get informed about the innovation, the technology, and they're able to quickly connect the dots and, hey, this is a need that I have and we should be talking more rather than wasting their time. So, right. So that's one of the things I would suggest, right? First, make it like a sales approach, right? For the companies, you have to be able to find the data points about the needs of the CISO. Sometimes they will tell you directly if you ask them. If they're too busy, you can find people in their group, their teams, their partners, their channel partners. They have a good understanding of what the needs are in the organization, and you have to understand that even before you actually go meet the CISO.
Right. Do the homework. So that's great. And before jumping into the quick question and answer format at the end of the show, is there any tips or common mistakes that you see at these initial stages of startups? Common mistakes that you see again and again and again that could be avoided?
Yeah, a couple that I mentioned earlier. One is don't become a Me Too product, right? You have to have strong differentiation from day one. And a big red flag is when you don't have design partners that you work from early design phases. So do that, right? Work with the design partners. That is a hard thing, right? To find a customer and him agreeing to spend that time with you.
Right.
And that is where it really becomes important. If you find the right people who have the right pain point, they will give you their time.
Right.
And because it is hard, people avoid that. And that is to their detriment. I would put it that way.
Right.
So that's my first tip most important tip for them.
Great point. And so if you would have the opportunity to have a coffee with yourself at the beginning of this new adventure with Dreamit, what advice would you offer to your younger self?
Yeah, my younger self, I would say that another important thing is to have a mentor. And I didn't have an understanding of that, when I started, unfortunately. I just learned, made all the mistakes, and I kind of learned from those mistakes. But if you have a mentor, you can avoid a lot of those mistakes. And that's one of the things we try to do at Dreamit, that we become a coach and we become a mentor. We have made all these mistakes, and that's why we produce so many Dreamit doses. We have 60 of them online. So it's important that you find a good mentor who has experience in this space, and avoid many of those mistakes. So that's what I would tell my younger self, right? Go find a mentor first.
And what are you the most proud of?
I think I'm most proud of the fact that I made the decision to take the risk, right? And most entrepreneurs who have taken that step, right, to go in and give it a shot. I think if there's no risk, there's no reward. So you have to take the risk. But that said, being a startup entrepreneur is not for everybody, right? You can certainly have a great career at a company, but there are some people are wired differently, right?
Right.
For me, I could have never worked for very large companies. I'm just not wired that way. If first, I think it's important to know yourself, who you are, and if being an entrepreneur is something good for you, and if it is, then you have to jump in.
Absolutely. Worst advice ever received?
So I think it's something along the same lines that the advice was, hey, you have a great career. I used to be at Goldman Sachs. I was there for 6 years. I used to have a consulting company doing quite well, which funded my startup. And the advice was, why just don't you continue to do this, right? This is fantastic, right? But I realized who I am, and that it wasn't just about money. Money automatically follows.
Right. Exactly.
You also have to be happy. So I think that was one of the advices, and you will most likely get that advice from your closest people, from your family, right? Because they may be a little bit risk averse. They want to protect you.
Of course.
So I would call that the worst advice. So know yourself and make your own decisions.
That's great. Favorite book?
Okay, I've got a few, but I like philosophy. So I would read religious texts. But one of my favorite books is Living with the Himalayan Masters. It's by Swami Rama. There's another one that I really like, Autobiography of a Yogi. Again, both of them are on philosophy. But on fiction side, I like the Dan Brown novels, like Angels and Demons and stuff like that.
Awesome. Favorite movie or series?
I like sci-fi stuff. So Star Wars, James Bond, Marvel. Those are kind of my go-to movies. I'll see them on day one.
Right. And the last one is a favorite podcast, excluding Scaleup Valley.
So Hidden Brain on NPR. That is my favorite podcast. But on the security side, I've been listening to Mike Hamilton, who's the CISO of Critical Insights. He's very funny. He's also very knowledgeable, of course. He's been an investor for a long time. So he has a weekly blast. So those are a couple that I think I can think of.
Perfect. Mel, thank you so much for making the time. It was a lot of fun to have you on the show, and thanks for sharing your experience.
Oh, my pleasure. Thank you for having me, Mike.
My pleasure. So, and we keep bringing you the best of the best to make your life a little bit easier scaling up your company. See you soon and keep scaling.